we're talking about BlackRock CEO Larry Fink, who was also in attendance. He also had exposure to FTX. So he said yesterday that the next generation for markets and securities will be the tokenization of securities. This would enable different ways to trade assets like real estate, stocks, bonds, and more, making all transfers visible to the public. I know last year we saw some trading platforms try this, but then they wound it down pretty quickly. I'm going to kick this off to Zach. What do you make of Larry's comments?
Well, I did want to go in on the FTX thing really quick. So they disclosed that they lost 24 million. BlackRock lost 24 million due to its FTX investment, which, that's pretty significant. I mean, hey, what's 24 million among friends? But still, that's pretty bad that BlackRock was among those impacted by this collapse. So anyway, just putting a finer point on that before we move on to the broader thrust of this one. Yeah, sure. Tokenized assets, great. I don't know. Is it better than existing systems for doing that? Given that it's going to be potentially run by, centralized entities who want to maintain control of how these things are settled. I don't know. I don't know if I'm bullish on this. I don't know if this is the same story as security tokens that we saw, many moons ago when that was going to be a promising use case for crypto technology. I don't know. I'm kind of bearish on this one until proven otherwise. But hey, if they're going to advance this in a meaningful way, maybe BlackRock is enough of a force to get some momentum behind it. But I don't know. I'm feeling kind of bearish. I'll toss it to David.
Yeah, I think that just to get down to brass tacks on this one, the reason this is appealing is that the current systems for trading securities are pretty limited jurisdictionally, right? You have cross-border limitations for who can invest and things like that. The problem is that you have the technology to go cross-border. You can just do whatever you want with a digital asset. But then do you have a regulatory and property rights regime to support that? Because especially if you're talking about equity, it's not like you can just have that token in your wallet and it means anything. You have to actually have the legal system in place to support that ownership claim. And as we saw, again, with FTX, that's not really working right now if you're talking globally, right? They had weird stock-linked derivatives that they said were like stocks that is another whole layer of what they were doing that's insane. So really, I think the question is not so much technology, it's regulatory and legal as to whether this will actually take off. Will or Jen, or I guess Will hasn't commented on this.
I'll snag it. I think the other question on here is not just the legal framework, which I'm glad you brought up because it's certainly key. I think it's also on the technology front. Who wants to use an Ethereum base layer chain to flip stocks right now? Wouldn't it be a great experience? You're going to have to wait for layer 2s or something else to pop up and increase transaction limits, increase volume, increase throughput, decrease fees in order for something like this to be possible. Building Robinhood on top of Ethereum right now isn't quite possible. There's a few things like it. I think DYDX and some other token exchanges do bring a pretty seamless platform. But adding Uniswap and securities and tokens all together in one bundle, I don't think it's quite ready for prime time. It'd be quite a bummer to be trying to dump your account on Uniswap, all your securities or all your shares of some company, and there's just too high of a transaction fee to get through, so you end up with nothing. And that has happened to many a token holder throughout the last few years, so I don't think there's really a technological solution to the thing he's bringing up at this moment. Jen, back over to you.
Yeah, it sounds like these insights came out of some research. So back in April, Fink was talking to the Wall Street Journal, and he said that BlackRock was studying crypto broadly. So that included stable coins. As you know, BlackRock is invested in Circle. It included looking at these tokenized securities, among other things. But I just want to kind of zoom out a little bit and talk and bring up another point from this talk yesterday. Larry said that he thinks that many crypto firms are going to shut down after the fallout from FTX. So it seemed like he had, a lot of insight to share on crypto. He is not bullish on centralized exchanges, and it sounds like this is maybe just some insights that have come from their broad research. Zach?
Yeah, I will say the case for this maybe working is that if you bring real world assets, right, RWAs, which are actually productive out in the real world, not just among the crypto coins, if you bring RWAs into the world of DeFi, the potential for real yield in these instances becomes much more attractive, right? And so if you can tokenize these things, represent them on chain, there might be a more sustainable version of DeFi that could advance in the future. So again, let's see if this works. If it does, it could be really potentially powerful for what DeFi will ultimately represent.